When it comes to investing, Warren Buffett is a household name. People look to his annual letters for insights into his investment process, hoping to replicate his success. One thing that's different this year is the challenging economic environment he's writing in. Inflation is stubbornly high, interest rates are up, and there's even talk of a possible recession. But despite all that, Buffett remains confident in the American economy and its ability to weather these storms. But before diving into more about that, let me first welcome you aboard for this episode of Finance Arc. On this channel, we set sail on a journey into the vast realm of financial matters, where we guide you through every step of the process and assist you in navigating the challenging world of finance, from simple budgeting advice to more advanced investing strategies. So grab your life vest and get aboard the Finance Arc. Warren Buffett, one of the most successful investors of all time, is known for his long-term investment approach and the value he places on companies with strong fundamentals. Many investors look to his annual letters for insights into his investment process and to learn from his decades of experience in the market. In this video, we will explore the valuable insights that can be gained from Warren Buffett's annual letter and how they can help inform our own investment strategies. Don't be a stock picker, be a business picker. So what does this exactly mean? It means focusing on the underlying businesses themselves, rather than just their stock prices. Let's say you're interested in investing in a company that manufactures electric cars. Instead of just looking at their current stock price, a business-focused approach would involve looking at their long-term prospects. What sets them apart from their competitors? Who is on their management team? How have they performed financially in the past? And what is their potential for growth in the future? By taking this approach, you can assess whether a company has the potential to generate sustainable returns over time, rather than just to make a quick buck. And this is exactly how Warren Buffett has built his fortune, by investing in companies with strong long-term prospects. To illustrate this point, let's take two different scenarios. In the first scenario, you invest in a company solely because its stock price is trending upward. But it turns out the company's profits were artificially inflated due to accounting fraud, and the stock price soon plummeted, leaving you with a significant loss. In the second scenario, you invest in a company that has a solid business model and a competitive advantage in its industry, even if its stock price is currently low. As the company grows and becomes more profitable over time, its stock price also rises, resulting in a significant return on your investment. So, if you want to become a successful investor like Warren Buffett, remember to focus on the businesses themselves and their long-term prospects, rather than just their stock prices. By doing so, you'll be well on your way to building a successful investment portfolio. Efficient markets exist only in textbooks. Have you ever been told that the stock market is always efficient, that everything is already priced in, so there's no way to beat the market? Well, Warren Buffett has a different perspective on that. He believes that efficient markets only exist in textbooks, not in the real world. In fact, he thinks that there are always opportunities to find great investments, even when it seems like everything is already factored in. The key is to stay vigilant and be willing to go against the herd mentality. This means not being afraid to invest in a company that everyone else is avoiding, as long as you've done your research and feel confident in the long-term prospects. For example, in 2008, during the depths of the financial crisis, Buffett invested $5 billion in Goldman Sachs. At the time, many people thought he was crazy to invest in a company that was facing such significant challenges. But Buffett saw an opportunity to invest in a great business at a discount price, and his bet paid off handsomely in the years to come. The lesson here is that there's always a chance to succeed, even in the most challenging market conditions, so don't be discouraged by the idea of an efficient market. With a little bit of know-how and patience, you can still find great investments and achieve your financial goals. The weeds wither away in significance as the flowers bloom. Are you someone who gets caught up in the highs and lows of the market or the everyday fluctuations of life? Do you find yourself overlooking the negative aspects when things are going well? Well, Warren Buffett has some wise words for you. According to Buffett, as the flowers bloom, the weeds tend to wither away in significance. It's a powerful reminder to focus on the positive and the things that are blooming in our lives, rather than getting bogged down by the negative. But what about those weeds in your investment portfolio? The stocks aren't performing as well as the rest? Buffett would tell you not to overlook them. In fact, he believes they can still hold value and be significant. It's all about finding the right balance and knowing when to prioritize the good while still addressing the negative. So, next time you're caught up in the ups and downs of the market or the general ebb and flow of life, remember Buffett's advice. For example, imagine you've invested in a company that hasn't been performing well lately, and you're considering selling your shares. Before you do, take a moment to examine the company's fundamentals and consider whether it still has the potential to turn things around. It could be that the market is overlooking a valuable aspect of the company, which could eventually lead to a significant increase in stock value. Remember, it's all about finding the right balance and knowing when to prioritize the good while still addressing the negative. So take Buffett's advice to heart and watch as your investments and your life bloom and thrive. Buffett's secret sauce to investing. Are you ready to hear Warren Buffett's secret sauce for investing? It's simpler than you might think. Time. Yes, you heard it right. Time is the key ingredient to successful investing. Patience during market volatility and fear allow you to take advantage of compounding returns, leading to significant growth in your portfolio over time. But don't just take our word for it. Take a look at Berkshire's initial investments in Coca-Cola and American Express. A $1.3 billion investment in each has now grown to a whopping $25 billion and $22 billion, respectively, with over $1 billion in dividends earned. Dividends often go overlooked, but they can significantly impact portfolio returns, as Buffett notes that 84% of the S&P 500's total return can be attributed to reinvested dividends and compounding. Buffett's own success is a testament to this. 99% of his $106 billion net worth was earned after age 50, showing the power of compounding and long-term investing. Remember, the weeds wither away in significance as the flowers bloom. Focus on a few winners over time and start early, because time is your friend when it comes to investing. So there you have it, insights and advice from one of the most successful investors in the world. His annual letters to shareholders are highly anticipated, and for good reason. They offer a wealth of knowledge and wisdom that can help anyone looking to succeed in investing and in life. But the question remains, should you follow Warren Buffett's annual letters? The answer, of course, is up to you. If you're serious about learning from the best and applying that knowledge to your own investments, then you should absolutely read his letters and take his advice to heart. Are you ready to take control of your finances? Subscribe to our channel for more tips on savings and investments. Don't forget to turn on notifications so you never miss a new video. Let's grow our wealth together. Stay tuned.